All right, what is up, tycoons? What's up, traders? Super excited for today's video. There's lots going on in the energy markets right now today, especially since OPEC announced that they were going to be cutting oil production. We've seen a huge jump in stocks like XLE, stocks like USO, and in today's video, we're actually going to take a look at both of those as well as cover some of the recent news. And I also have another stock we're going to look at, ticker symbol VLO, which is an energy company. And that one actually is a viewer request. I do viewer requests every single week. So if you want to see your stock in the next video, all you have to do is simply comment down below and I'll get to it as soon as I can. This is some of the news that we're going to be taking a look at. All right, this is the USO chart. This is the XLE chart right here. This is VLO. That stock went up over 100% in 2022. So we're going to break down those. All right. But before we do so, full disclaimer. All right. The content provided in this YouTube channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Myself and any individuals on this YouTube channel are not registered financial advisors or brokers. Trading in stocks, bonds, commodities, crypto involve a significant risk of loss and is not suitable for all investors. So be sure to read through the full disclaimer. We're going to go ahead and hop on and start off here with the news. All right. So OPEC raises their forecast for China's oil demand growth again. Now, I've been mentioning stuff like this for the past few months, right? And I've actually been kind of bullish on energy. All right, especially when China announced that their zero COVID policy was over, they're going to be opening back up. And, to me, it only seemed reasonable that they would be using more energy, right? Just a little bit of common sense, not too much deep dive into the economics, but from a common sense point of view, you would think that, okay, well, if people are working more, if people are traveling more, then there is possibly a chance that, they would use more energy, right? Now, their oil demand is set to grow by 760,000 barrels per day. And OPEC just announced that they're going to be cutting 1 million barrels per day in production. So really, really interesting there when you compare some of the numbers. Now, OPEC cites risk to summer outlook as a backdrop to the shock cut, basically saying that their demand outlook is the reason why they're cutting oil production right now. And a summary of that is basically they're flagging rising inventories and summer demand uncertainties. It says the U.S. bank failures have limited economic impact and keeps global demand growth steady at 2.3 million barrels per day, right? Now, the Saudi-U.S. relationships, they are souring further on huge OPEC plus surprise cut. Optimism over a possible rapprochement between Saudi Arabia and the U.S. is fading. The large unexpected production cut is yet another sign that Saudi Arabia is moving closer to Russia. Both Saudi Arabia and Russia need Brent crude prices well above $80 per barrel. Now, there's a lot of stuff going on geopolitically right now, guys. You have BRICS, which is basically like Brazil, Russia, India, China, a couple other countries, forming together right now. And de-dollarization has been a really big topic. So, I'm not going to get too political and talk about war too much, but, things are a little bit concerning when you look at how some of the US's allies and then how, some of their foes and not necessarily their allies, but enemies, are starting to partner together and move closer and, just form tighter relationships and looking to potentially, de-dollarize the US dollar as the global currency. Now, do I think that realistically that's going to happen anytime soon? I really don't think so. I definitely don't think people are going to move to, the Chinese yuan, which is ran and controlled by a Chinese communist government. That's really not going to be beneficial for any of the parties if they move that to, the global currency. Now, enough about that. Let's go ahead and get into some charts. So, forgive me, this actually says weekly chart up here, but this is the daily chart time frame. And so, I've been covering these charts and these setups for a while, guys. All right. And going over some of the major key levels. All right. One of the big things that had me bullish, if you take a look here, we had a bullish divergence. Okay, so as you can see here, we had a bullish divergence on the MACD. If you're not familiar with that, it's actually super simple and pretty useful too. Once you start doing it on your own, it's one of the things that I like to use to help give me an edge. No one strategy or one indicator is going to be perfect 100% of the time. Otherwise, we'd all be billionaires, right? And every trade would work every single time. But in this case, what we had was a low here and a lower low right here. So clearly the price was in a downtrend, right? But if you take a look at your MACD, okay, and this trend line actually extends all the way over here. We had a lower low here, and then we came up and made a higher low here. So while the price was making lower lows, the MACD was making higher lows, and this is a term known as bullish divergence, okay? It's very simple. You can see here actually that we dropped right into my demand zone, guys. Before we even dropped down to these levels, I had these levels charted. I was posting videos with these levels, and you can see we came down and consolidated right to these levels, hit those levels, and then OPEC announced the oil production cuts right over here, and we jumped right up past our breakout level, and we're currently battling this overhead supply zone. Preferably, we would look for a break, retest, and then push higher to our bullish price targets, which are about 74, 75, 79, and 78.38. Now, things have run up a very large amount. On top of this bullish divergence right here, you can see we were also oversold on the RSI. That stands for the relative strength index. It's going to give you the relative strength of a stock, whatever it is that you're looking at its given price levels. And we came down into this demand zone with bullish divergence, and we were also at the technical definition of oversold, which is 30 or below. So once we hit those oversold conditions, we saw a really strong rally. Now is maybe not the best time to FOMO into this kind of stuff, as we do have two gaps down, right? If we take a look, we have a very huge gap right here in between these two candlesticks. And then we also have a small gap down that we recently created off of the bullish CPI report. And we can see that, we're at overbought conditions now. So the opposite of oversold, we're now at 70 or above on the RSI. And this is the technical definition of overbought. Generally, as a general rule of thumb, right, you typically don't want to buy something that's overbought in overbought conditions, because the likelihood of it having a pullback is much stronger. Now, just because something's overbought does not mean it can't go higher. Okay, that's definitely not the case. But from a risk to reward standpoint, it's much more risky to be buying something at overbought conditions versus perhaps oversold, right? So that's USO. All right, that's the daily chart, not the weekly chart. That is the daily chart. Okay, we're going to move on to the next one real quick and take a look over here at XLE. Now, XLE, okay, I've been tracking this one as well, and it's been stuck in this bearish channel right here, indicated by these two trend lines, really since the start of November of 2022 is when we saw a lot of oil prices start to drop. Okay. And, it's been in trading in a bearish channel. Now, recently we had a liquidity grab, which, I've gone over this in multiple videos, but really quickly, what we have here essentially is algorithmic selling, right? These trading channels often are algorithmic buying and selling. And so what happened here was, they didn't have the liquidity they needed to really make the next push up once it came down to the bottom of the algorithmic channel. So what happens is a bunch of stop losses get triggered. Okay, we did have a gap down to fill here, and we have another larger gap down to fill that we did not end up filling, but we did fill this smaller gap down right here in blue. And you can see that, essentially we came down, triggered a bunch of stop losses, right? To, fill that liquidity for the next move up, right? And so now we're back in that channel, this bearish channel that we've been in, but you can see we're trading over the halfway point of this channel. All right, so we're trading on the upper half of this channel, and we're going to see if this upper half trend line here can continue to be a support level, and if we can push higher. If we can break out of the bearish channel, my main breakout level is going to be our previous high over here at 94.85, and above 94.85, we have a chance of hitting 103.10. Now, we're very, very far away from those price targets. These are more of macro price targets and not necessarily such short term. Okay. Now, when it comes to support, we really need to hold above this 84.88. Now, if we do break 84.88, we have 81.79 and also 78.71 are going to be some major support levels that I'm paying attention to. When it comes to the MACD right here, okay, you can also use this to spot entries and exits. So if you see here, we had the red line crossing below the blue line. That's what's known as an exit signal. And you see we had a large push to the downside. Over here, we got an entry signal, which is the red line crossing above the blue line. And you can see we had a strong push to the top of the channel. And then over here recently, okay, in the middle of our liquidity grab, we actually got a bullish crossover, an entry signal. And you can see we've had a strong move up. Now, keep in mind, we did create another gap down most recently, and we really filled about half of that gap, right? If we look at the gap itself from this candlestick and this candlestick, you can see we came down and filled about half of that gap right in through here. which is usually a bullish signal, right? So we had a half gap fill and we're pushing up higher. We're going to see if that momentum can continue. The RSI is not yet at overbought conditions, but we do need to keep in mind of any possible bearish divergences that may end up forming. So pay close attention to those on the RSI. We're going to move on to the next chart now, and the next one we have here is going to be VLO. Now, this is our weekly time frame, all right, and so this is a larger time frame, and what we have currently is we do have a little bit of a rising wedge. Now, you could call this bull flag consolidation. I'm fine with that if you want to call it that. But to me, I just want to be cautious and be aware of this rising wedge right here. If we break this trend line that we've tested a couple times, there is a good chance that we could come down to 97.92, which is right around the bottom of that channel, and also our 61.8% retracement level. Now, the reason I use the retracement levels and the 38.2, 50%, and 61.8% levels specifically is these are the three most common and well-respected Fibonacci retracement levels. So you use these to identify trend continuation because nothing moves in a straight line down or in a straight line up. Rather, you get a move down retracement, continuation lower, or a move up retracement, continuation higher. So, we're going to see after we've had this strong push to the upside, if we do break this rising wedge and come down to the target area of 97.92, that is completely still in healthy retracement territory to try and push up higher ultimately and continue the trend. So, just keep that in mind, all right, that if we do end up getting, a 30-point drop on VLO, that could just be, some healthy consolidation to try and go higher. Now, if we break below 97.92 and flip that to resistance from support, then most likely we're going to come back down and retest some of our previous lows we have over here in the $60 to $70 region. And be mindful, we do actually have a gap down all the way to about 40 to 45. And now I don't think that gap is going to fill anytime soon. It's very far away, but it is something that if we start a bearish trend, we could end up gravitating towards. Now, not only do we have a bearish chart pattern forming right here with this rising wedge, we do also have bearish divergence, right? And so take a look how we have highs here, higher high, right? So we have a high, we have a higher high, then we have a higher high again. And then at those same exact points on the RSI, we have a high, we have a lower high, and we have a lower high. So we're making lower highs, losing relative strength as the price of the stock was going up. That's a term known as bearish divergence. And, ultimately, if you want this to go bullish, you're going to need to see a breakout and a retest of this trend line and stay above. You need to be very cautious of a breakout and drop back into the range. This is known as a look above and fail. And it is significant because right here on a breakout, bulls are really presented the opportunity to push things higher. And if they get a breakout, pull back, and do not bounce off of this area or flip it to support from resistance, then what they're going to do is basically fail at the presented opportunity to really push things higher. And that's going to be a sign that bears are taking control and in control of the price action right now, because even though bulls had the perfect opportunity, they weren't able to outmatch and, take over the bears. And the bears ultimately, had control and were able to push things lower. So be mindful of the RSI as well as this chart pattern here on the weekly chart. Okay, these are a little bit more of some macro setups on the weekly chart. So, we're probably not going to see this develop in the next week, but this is something you can keep an eye on, over the next coming months to be prepared for in case of any downside risk. You want to have some type of risk management if you're trying to play any of these positions or go long on them, right? Now, this is the daily chart setup. Okay, and similar to one of the last slides we had on this presentation, okay, you can use the MACD for spotting potential entries and exits, right? So we had a crossover to the downside here, strong push to the downside, crossover to the upside, strong push to the upside, strong push, crossover to the downside, another strong push, so on and so forth. Now here recently, we did get a MACD crossover and had a strong push up, but what we've done is we've actually come back down now, and the blue line and the red line are basically even right now. So there's a big question. Is this potentially going to turn into a sell signal and cross back down below, as it has done many times in the past and ultimately led to a pretty significant drop? Okay, now those are all temporary drops, and we've done a good job of, recovering after those, but that's something you want to be prepared for as well. Now we have our major Fibonacci retracement levels here on a smaller time frame, okay, on a smaller rally, on a smaller uptrend. And you can see we've been holding the 50% level pretty well, which is right about 124. And, we're currently bouncing off the 130.14 level, which is our 38.2% retracement level. All right, this is that rising wedge from the weekly chart, okay, that we have here, indicated by these two trend lines. But pay attention how on the daily time frame we have a left shoulder here, we have a head, and then we also have a right shoulder forming here. So this neckline right here in particular, this red dotted line, is one that you want to pay close attention to, right? If we do end up getting a break and retest of this trend line, there is a chance we could get the head and shoulders to play out. And guess where that takes us to, guys? 97. And if we look at the last slide, that's also where our healthy retracement territory is for the larger uptrend that we had in 2022, taking the 2022 lows up to our most recent highs. If we do get a 61.8% retracement, it's going to take it down to that 97 level and play out the rising wedge, which also that would play out the head and shoulders that we have on the daily time frame. So, when you look at VLO, when you look at XLE as well as USO, we have those big gaps down to fill as well. All right, so things aren't always going to be smooth sailing and go up in a straight line. We've seen a really big pop in a lot of energy related stocks, and it would make sense if we do get some type of a pullback. Now, just because we pull back doesn't mean we can't go higher. And it also doesn't mean that we have to get these pullbacks, but I'm really just trying to give you guys some unbiased technical analysis. I do have 100 gush shares, which is basically kind of like XLE, but it's the 2x leverage version. If you guys want to check out that video and look at my position that I have in gush and see what my average cost basis is, you can click on this video here. It's part of the 50K portfolio challenge.